In front of us lies the largest wealth generating opportunity of all time. By the end of this year, we should get to about billion wallets. The point being is this scaling is going to continue, and I think it's going to keep accelerating. So what does it mean for all of us? Really simply, this is a $3 trillion industry today. It is going to 100 trillion by, let's say, 2034. 100 trillion from 3 trillion. Maybe I'm wrong by 50%, and it's a $50 trillion industry. If it's 100 trillion, we're only 3% of the journey. So all of you who say, oh, should I be buying Bitcoin so high, or Solana or Ethereum? 3%. It is going to 100 trillion or 50 trillion. It'll be the largest accumulation of wealth in the shortest period of time the world has ever seen.
Today, as we step into a world of financial intrigue and dynamic market forces, we'll hear the latest predictions from Real Vision CEO Raoul on Bitcoin, crypto. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin's price sits just over 96,700, up almost 4% in the last month. Pal discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
We're only 3%. If you just think of a little scale, and we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us. Your game is to hold on to your tokens from 3%, $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns. As of an asset class that produces la-la land returns anyway, you don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years, a down 70 or down 80% market, you'll feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them, and your wealth will be compounding. That's one thing. The other thing is, once you're in this space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1,000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You know, you're holding in Bitcoin, Ethereum, and Solana has only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the mega trend. Rule number one, don't lose control of your tokens. And that brings you into, okay, so how do I asset allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, stupid, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. So it becomes very difficult to even justify starting a business, which is a bit weird. But really, how I prefer to see this space is it's a broader adoption than just Bitcoin. Bitcoin is one of the big use cases, but it's not all of the use cases. And so I would just take the three most prominent coins of the moment, which is Bitcoin, which is, let's call it the pristine collateral, the security, the safest asset. I would take Ethereum, which is the broadest, deepest asset. And I would take Solana, which is the new fast entrant that is rapidly gaining massive adoption effects. Hold those with 80 or 90% of your portfolio and do nothing. You just don't need to do anything. Then there is that inner degen inside of you, that part that wants to trade other stuff, that wants to trade in memes. Well, do that with the 10% of your portfolio. I pretty much guarantee, because I've tried this a couple of cycles now, that bag of investments is usually worth about zero at the end of it. You've had a lot of fun, but you've lost all of the money in it. But you'll be more than offset by your major allocation. So it's things like this that are really, really important. Is don't use leverage, because leverage means when the price goes against you, you lose your tokens. Don't buy stupid, don't go too far out the risk curve with too much, because if that token doesn't work, you've lost control of your money and your ability to participate in the big trade. Don't FOMO into stuff because you don't understand it either. You don't know, you don't have an edge, don't pretend you do just because your mate told you. You know, the reality is that every time a friend of mine tells me to buy some meme coin, and I'm in a weak moment, maybe I'm tired, maybe I'm hungover, and I buy it, it usually goes down 80% almost immediately. So don't trust your friends either on their tips, because they're not very useful for that.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
But these are really the important things. The other thing is, how else do you lose your token? A lot of people look for yield. And I don't have a problem per se with yield. I've never been a yield guy. I'm a macro guy. I'm a price guy. But yield, if you're putting your tokens in control of somebody else to generate returns and you don't know where the returns come from, it probably works for a period of time, and then at some point it may well blow up. And then you've broken rule number one. You've lost control of your tokens. So you need to be really careful with leverage. The other thing is, this is a bearer asset. What a bearer asset means is you need to take control of it yourself. Now, you can keep it on an exchange, and I think the big exchanges, the very big global exchanges, are relatively secure. But the beauty of this asset is you can be outside of the system by storing it yourself. And that is storing yourself on something like a ledger device. Doing that gives you the maximum flexibility, but the key is not letting somebody else take control of your coins. Again, you'll be so upset if you don't have your tokens and you lose them because you got hacked, because you were storing them on your MetaMask wallet and you went to a website to buy some stupid meme coin and it was a scam. You've got to be really careful. This wallet cleanliness, separating your assets, using a different wallet to operate in the Web3 world versus a different wallet where you store things safely. Do these things and you will increase your probability of not f***ing up. We will all get something wrong somewhere, so don't worry about that. But this is my kind of recipe for the highest probability of success, where I can bring as many people along on the ride as possible. And that would make me very happy indeed. Imagine when Facebook launched in 2012, imagine if they'd given every single user a Facebook share. What would be the value of Facebook and how much wealth would it have created for humanity? This is what this technology does. It is incredibly powerful economic incentive machine to bootstrap the next version of the internet in record time. That next version of the internet gives us almost infinite use cases, whether it's to do with money, the entire global financial architecture, whether it's to do with value, whether it's to do with ownership, whether it's to do with identity, or whether it's to do with AI and economic systems that are yet to emerge. That's what it's here for. That's the infrastructure that is being set up. That is why people are making money out of this as we start hitting adoption curves, as we're testing out these new technologies for mass scaling. It is an extraordinary time to be alive.
Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing ethereum. Pal also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.